Need cash fast but unsure how short-term loans work? Or if they're even a smart idea? Well, you're not alone. Today we're breaking down everything you need to know about short-term loans. The pros, the cons, and how to use them wisely so you don't get trapped in a debt spiral. Let's jump in. Section 1. What are short-term loans? Short-term loans are loans that you pay back quickly, usually within a year or less. They're designed to help with things like emergency expenses, unexpected bills, or bridging the gap between paychecks. They're fast, easy to access, and come in several flavors like payday loans, installment loans, monthly loans, and even 90-day loans. Sounds convenient, right? Well, let's take a closer look. Section 2, pros of short-term loans. Let's start with the good news. One of the biggest perks of short-term loans is speed. And I'm not talking about a few weeks fast. I'm talking about same day or next day funding in a lot of cases. That can be a lifesaver when an emergency pops up and time matters more than anything else. And here's another plus. You don't always need perfect credit. Many short-term lenders have looser requirements, so even if your score isn't where you want it to be, you'll still have a shot at getting approved. Another thing people love, you're not tied down for years. It's short-term, meaning once you've made those payments, you're done. No dragging debt behind you for the next 5 years. Plus, there's variety. You can pick a type of short-term loan and repayment schedule that actually fits your situation instead of being locked into something that doesn't work for you. And if you're responsible about it, making payments on time, a short-term loan can actually help your credit score. That means down the road, you might qualify for even better financing options. Section 3, cons of short-term loans. Now let's flip it around because the speed and convenience can come with a cost, and that cost can be very high. We're talking interest rates that can be sky high, sometimes even in the triple digits. If you don't pay it back quickly, things can get out of hand fast, and that's where the debt spiral starts. Too many people end up taking out a new short-term loan just to pay off the last one. You do that a couple of times, and suddenly you're stuck in a cycle that's really hard to break. Short-term loans also aren't great if you need a large sum of money. Most of them cap out at just a few $1,000s, which might not help if you're facing something like a big home repair or a major medical expense. And finally, watch out for shady lenders. There are some out there who prey on people in tough situations. Hidden fees, aggressive repayment terms, misleading fine print, it happens. So you've got to do your homework. Research the lender, read the reviews, and make sure they're licensed in your state. Section 4, when a short-term loan makes sense. So when does a short-term loan actually make sense? Honestly, it depends. If you've got a one-time emergency, you know you can pay it off quickly, and you've compared your options, it can be a smart move. But if you're borrowing to cover the cost of same bills month after month, or piling new debt on top of old debt, that's a red flag. In that case, the best move is to hit pause and look for a better long-term solution. Section 5, where to get a short-term loan. If you decide a short-term loan is right for you, where should you go? Online lenders are fast and convenient, but you've got to make sure that they're legitimate. Credit unions can be a great option. They offer lower rates and more personal service. Banks tend to have stricter requirements, but they're reliable. And then there's private lenders. More flexible terms, but again, do your homework. No matter where you go, compare rates, read the fine print, and don't rush into it. It's your money. Treat it like it matters, because it does. Section 6, how to use a short-term loan wisely. Before you apply, here's a quick mental checklist. Know exactly what the loan is going to cost you. Not just the payment amount, but the total cost. Have a clear repayment plan before you sign anything. Use it for emergencies, not for everyday spending habits. Avoid rolling it over into another loan. That's how the debt cycle starts. And finally, work with lenders you trust. If you stick to those rules, a short-term loan can be a tool to help you, not a trap that holds you back. Short-term loans can either be a smart tool in your back pocket or the start of a debt spiral you'll regret. The difference comes down to knowing the real costs, having a payoff plan, and working with the right lender. If you're considering one and want to make sure it's the right move for your situation, reach out. We'll help you weigh the pros and the cons before you sign anything. And if you want more straight talk like this, real strategies, not generic advice, stick around. This is where we break down the money moves that actually work in real life.